Hey tradies, it's Will, and we had a little mix up this week. I had some travel that held us up on recording our episode, but love you guys. Love everybody that reaches out to me every week with questions, including you keyboard warriors out there that just love to spew hate all over comment sections on the internet, including Spotify, YouTube, TikTok, all of them. But nevertheless, hey, I wanted to throw together a masterclass of some of the one of the most important episodes that I think that we've had. I have tons of business owners all around the country asking me about selling your business. And you know my concept around this. You are not going to take your business with you. Somebody's going to get it, whether or not it's your family, you sell it, you put it in a trust, you sell it to a family practice, whatever. And Christian Olson had one of our best episodes. I can't tell you how valuable this guy is. So we threw this together last minute, trying to get back on our schedule starting this next week. But otherwise, enjoy the episode. Look forward to seeing you guys next week. Cheers and peace. Beers of Contractors. Talk soon.
Welcome to Beers with Contractors.
Tell me a little bit about what led you into this wild world of mergers and acquisitions.
Yeah, no, absolutely. So, as a little kid growing up in Minnesota, obviously it's cold. So there's two seasons, right? There's winter and there's road construction, right? And, I was kind of blessed. My grandfather was a longtime tradesman, kind of after World War II, instead of taking the GI Bill, he decided to go into the trades and ended up being kind of a very skilled welder and plumber, pipe fitter. And actually it's kind of cool because he was part of, I kind of put in my bio, right? Like the Southdale Mall in Edina, Minnesota, which is where I grew up. That was like the first indoor mall in the country. And then he was one of the, him and his crew were the guys that kind of built that. And the all famous Metrodome up in Minneapolis that, had the roof collapse. That wasn't him. That was the roof. But yeah, I just remember kind of as a kid going to all the Union Hall and going to the Christmas parties and all that sort of stuff. And then of course, being a contractor and working in the trades. I mean, he had tools in his car, tools in his garage, tools in the basement. That way he didn't have to walk up and down the stairs, to find the right tool. So he had two of everything. And as a kid growing over there, we'd always have, find stuff to build and that sort of stuff. So I kind of picked up, that, and that kind of has some background roots and I like to build stuff and do projects around the house and all that sort of stuff. But, my wrench is an Excel spreadsheet. So that's kind of my tool of the trade.
Well, hey, they say the pen is mightier than the sword.
Yeah.
Right. And the spreadsheet has become probably one of the mightiest instruments in business now, especially in the world of selling, buying, businesses, mergers, all that stuff. So I know you went to school for finance, right? And then you kind of had a journey before landing at Footprint Capital, right?
Yeah, correct. Yeah. So when my education, I did my undergrad in finance and technology management. And, I know, Will, we kind of talked a little bit on some of the software stuff. So I kind of had some familiarity with some of these ERP systems, the dirty word ERP, and now it's kind of Service Titan. Or I've had, we should tread lightly, but I've had a client refer to it as Service Titanic, just because of the complexities and stuff that goes along with that. But followed my way from there into grad school, and then took a couple of corporate jobs in logistics, and then went into Ashland Chemical and kind of worked globally across their enterprise. And, our group was kind of responsible for evaluating and analyzing kind of any sort of CapEx or M&A transaction over $500,000.
Holy smokes.
Yeah. On that side. And then, and
still,
yeah.
holy smokes.
Yeah. And then, what kind of found me into the trades is I actually then, after kind of doing a couple corporate jobs in that type of framework, had a role that was offered to me within Ashland down in one of the businesses. And I found myself running the building and construction adhesives group along with transportation adhesives. And so I did that for about 3 or 4 years, and then came across the guys at Footprint that I'd kind of known in Columbus. And, they were just kind of starting out and jumped in with them. I remember my second deal was actually a small little plumbing, drain, and business up in kind of the Akron, Ohio area. And when I started kind of evaluating that and looking kind of the buyers, we thought it was going to go to somebody up there that wanted to kind of take it over, similarly. However, when I was kind of doing our market research, came across a couple of groups, and one of them happened to be North Branch Capital, which at the time, maybe a lot of people don't know North Branch, but North Branch was the integral part of kind of forming what is now known as Heartland Home Services. And that's, since our transaction, they went and acquired, I think, 55 other contractors kind of throughout what I call the Midwest, from Chicago all the way to Ohio, and have about a $500 million revenue portfolio. of brands kind of scattered throughout the Midwest.
Wow.
So got to learn a lot about it through that little deal. What turned into, what was a small little business, small little plumbing and drain business, quickly turned into learning a lot about the space. And then it had kind of spiraled from there. And one deal led to another. And we've done probably over 10 plus in the space now across all different, types of industries and the trades, and just getting ready to close a couple more here, come a couple months in the spring.
Very nice. Christian, can you kind of walk us through the difference between private equity and investment banking? And why is it important to the contractors to know the difference?
Yeah. So kind of what I call like traditional private equity are groups that, they're investors, and that's how they know. And they basically kind of, had a career. And I also kind of say, hey, this is kind of capitalism at its purest form, because if you don't perform, you're out. Uh-huh. And so what these guys do is they go out and they raise money from pension funds, I would say like institutional investors, like insurance companies, pension funds, state teachers retirement programs, firefighters got a retirement plan, all those types of municipalities raise the money. Mm-hmm. And then basically they go out and invest it in privately held businesses, with the goal to make a return that's superior than investing in the stock market. So that's kind of private equity, in its kind of purest form. Now with that, they have a specific model where they have to deploy that capital in a certain amount of time. So call it, 1 to 3 years. And then in kind of 3 to 5 is when they kind of say, we need to harvest, right? And kind of produce a return for our shareholders, because they're locking up that capital for a 3 to 5 year type of position. Mm-hmm. They have to deploy it and produce a return. Versus our group, we're on the investment banking side. So we actually, help facilitate those transactions with private equity, with strategic buyers, publicly held companies, et cetera, on behalf of the client. So typically in our engagement, we're hired by the contractor to help them do that deal and help them either bring on a partner, 100% liquidity, all various different shapes. You've heard kind of probably an ESOP formation, all sorts of transactions. We're hired by the client to kind of meet their needs and basically get a transaction and a structure in place that they're looking for. So that's a 2-minute or so overview. The process, I would say, kind of soup to nuts from an engagement to an actual transaction is probably six to 9 months, maybe 12 months, kind of depending upon the goals and what may need to be prepared for getting it quote unquote ready to market, because the investors have a specific way that they look at things.
So what is some of the updates from the mergers and acquisitions market post-election? Like what are we starting to see in the next 12 months?
Sure. So no, that's a good question, because, from our vantage point, and this maybe backs up like a couple years back, we saw what I would call like a little bit of a slowdown and some softness. And primarily what had kind of transpired just from a macro level was, you had obviously rising interest rates with mortgages, et cetera. Well, what follows that is consumer financing. So, what typically, if you were going to finance a $20,000 HVAC unit at 0% versus 10 or whatever now, it's a little bit different story from a consumer perspective. So we had that. And then we also had, what I would call like a pretty weak shoulder season in across the Midwest, in that we had very warm winters. And there really wasn't a, hey, turn my furnace on, stress the system type of thing. So it was really a couple mild winters basically stopped that whole kind of replacement cycle. And so we saw some, what I would call like some slowdown in a lot of the consolidation and to sort of the volume of transactions that were getting done. There were some ones getting done for sure, but obviously just the whole wave that we saw from like 2019 till 2022, when a lot of these platforms were in kind of platform creation stage, I'll call it, slowed down, and the buyers were getting more and more specific on specifically what they're looking for, what they're buying, rather than just buying a business to buy a business and we'll integrate it later. And so you had a lot of these platforms that were starting to quote unquote like digest their businesses that they've acquired, over the last several years to really make them operate and scale and et cetera, kind of prep them for the next cycle. And so what we're seeing now is kind of coming into 2025 is a pretty active market where you have a lot of, outreach and I would say kind of the market is coming back. And as long as everything kind of stabilizes with tariffs and, some of the other kind of quote unquote political noise, we should be in for a pretty solid and robust M&A front as it comes into 2025.
Now, Christian, I know Will's dealt with private equity before, but for the contractor who's out there running their business, maybe they have multiple locations and they're starting to get stressed. Can you break it down how private equity looks within the relationship of owning their business, being involved? Like, are they giving up everything, all control, or is it a partnership? If they're fearful of it, how would you talk to them?
Yeah. So I would say, and kind of one other kind of comment I had too, was you had a lot of, there was a lot of these like roll-ups or consolidated platforms that never kind of sold. So it's like once private equity's game, it's like very similar to like flipping houses on HGTV, right? You go in, you buy the property, and then you turn it and make it better and you flip it. And there wasn't a lot of transactions at the top, meaning these bigger platforms. Now that we've had some of that, they're starting to unlock, new buyers, new outlook, et cetera. And so that comes in all different flavors down to the contractor. It really kind of depends Terry, to your point, like if you're, that's one of the factors that we provided in our services is really getting a good understanding of the contractor, what he's looking to do, what he's looking to get out of a transaction, and then kind of aligning him with the right partners and the right groups that value that type of a relationship. And so that can, range from the businesses, I say big enough to maybe some minority growth capital infusion, which looks more along the lines of like a debt offering.
Yeah.
Or, a control transaction, which is anything kind of greater than, 50%. And kind of depending upon the age of the owner, et cetera, you may be looking for, 50% type of a partnership or 51, basically 49%, or basically, hey, close the deal. I'm going to hit the beach in 1 to 3 months and we're out. And so that kind of allows us to go out and find the right type of a buyer, that you're looking to do a deal with. It kind of helps. That's the framework for us as advisors to make sure we're finding that right partner.
So even if a contractor is looking to fully exit, they're ready to sunset, retire, and they want to walk away and they don't have anyone to step up, they can work with you all, and that's part of that process.
Correct. Yep. Absolutely. Yeah. And that's kind of, from our vantage point, the earlier the better, because that allows us to prep the business and I want to say marketing the business accurately, but positioning it for a sale, meeting kind of our clients' goals in mind. And some of that is, like you said, that outright sale. And a lot of these, a lot of contractors say, hey, I'm going to sell my business and I'm going to go to the beach, et cetera. But in reality, the biggest thing is unpacking, and a buyer will dig right into this right away, is how much work is he doing in the business and can we allow him to do that? And so part of our value proposition to the client is to make sure that we're kind of solving for that. And sometimes we've had engagements, as an example, where we signed up a client and 2 years later, we actually executed the transaction. And the rationale behind that is because, we need to make sure that there's a management team in place, and we kind of give a run rate where we can elevate somebody into that chair and make a couple different things, make a couple different tweaks, or, we talk about KPIs, make sure we're tracking KPIs and managing the business the way that a buyer is going to manage it post-close. And so, what that leads to is highest value execution of the transaction versus getting all the way to final close and you're not getting a deal done, which is a lot of work.
We had this funny conversation last week about like these fire sales, man. They're either in panic, something's wrong, they kick the kids out of the business and they're like, screw it, I'm going to the beach, take it all. And they're like, here, make something work with it. We know that is like the worst thing, of course, because contractors were good at kind of getting caught in the whirlwind. I mean, what are like the top 3 things a contractor can do to just even prepare to make sure that fire sale doesn't happen?
Yeah. Well, so, I mean, not to give a shameless plug, but if you want your full day-to-day job to be...
It's okay.
Yeah.
Plug away.
Yeah. Talking, negotiating a purchase contract, like, learning all this stuff. I mean, it is like a full-time job in order to execute an M&A transaction. Will, I'm sure you've got some stories from your transaction, but, in all reality, like you said, we like to be in as early as we can so that we can help kind of get our hands on the business, understand the financials, what are the levers, pricing, margin profile, KPIs, all these different things that kind of what a new buyer is going to put in place if it's an institutional investor. And then also too, we got to remember, like, these guys are really good, and that's all they do is look at deals. They're going to find everything. Our objective is to make sure that we're preparing our client to make sure that they're ready to face, a firm that's maybe they're investing, $10 billion under management, right? And they've got a platform that's $500 million in revenue, right? At that point, they've probably done 20 plus transactions. And so they're going to know what they want, what it needs to look like, and how they can integrate that business seamlessly without having disruption. Because the last thing they want to do, and we're in a service business, right, with contractors, is the people are the most important. So I'd say, a lot of times what we see is the misconception that they're going to come in and private equity is going to fire all my people and they're going to replace it with theirs. I mean, that is, at least at our level and in the industries that we deal with, that's not the case. And so I would say the top 3 or 4 things is number one, kind of be honest about kind of your role in the business. And if it's something where you're still working, 60, 80 hours in the business or 40 to 60, you got to start maybe taking a step back and say, am I working like in the business or on the business? And putting people into those roles and empowering them so that, you can kind of say, hey, here's my top 3 or 4 kind of key management team that is going to, be available to lead this business after I exit it at a certain point in time.
Now let's transition a little bit into kind of the exit strategy of kind of the business, right? And what I mean by that specifically is we've gotten an LOI, letter of intent, right? And we're working through the business. Now, take us through the negotiation process through the exit. And what does that normally look like for most companies?
Yeah, so it's interesting, especially too, if you kind of look at the contractor space. I mean, Will, it, like you have a lot of friends all over the country. You guys have your next star meetings or what is it, like CEO Warrior? I mean, a bunch of different, EOS, like these kind of what I'd say industry groups or business training type of groups where the leaders will get together, discuss best practices, et cetera. And so what we've seen in our space, especially in kind of the home services and contractor space, is with so much capital on the sidelines, and meaning these private equity firms have so much money to invest, they've hired so many people, and I kind of used to try to solicit, you to sell your business and basically kind of try to eliminate us from a process or source it through their friends or, hey, we sold to this guy. These guys were great. So one thing for certain is that typically that's how a lot of these, consolidated platforms have been growing and scaling, is they've been sourcing the businesses from the guys they buy, their friends, et cetera. And, and not really enlisting, set type of a broker or investment banker like the services that we provide. And so what that happens is, the LOI shows up and they sign it and you march off into diligence and, you don't really know what your value is. And, obviously you've got a dynamic here where, as a seller, you're trying to sell it for as much as possible and a buyer's trying to buy it for as least as possible to up their returns. And so kind of going back to your country club multiple, there's a lot of different factors that kind of go into that. And so from our perspective, it's kind of doing the preparation and working through so that we're the ones that are going out to find the right fit and the right buyer. And we're creating kind of what I'd say competitive dynamics to ensure that we're getting the best deal, not just in terms of value, but partnership, structure, exit time frame. I mean, all these different factors, the management, kind of buy in to solidify and get the best deal possible for our client.
Hey, Christian, what is like the smallest contractor size business that would be considering private equity?
Yeah. I mean, I think it really has to, we kind of in our industry say there's got to be a little bit of meat on the bone.
Right.
And, I would say I would kind of put that at like 500,000 of EBITDA would be kind of a low target. I mean, obviously, you can be smaller, but at the same time, once you kind of back up, below kind of 500,000 of EBITDA, you're, now it's kind of another term I've heard is kind of the chuck in the truck, right? That type of, contractor out there. And those like, it's highly levered to the business owner. He's doing the invoicing at night, doing the estimates, on the off time. And that's just not a business that somebody as an investor really would want to kind of take on as an investment because it's risky, right? If something happens, the whole like, hey, get run over by a bus type of logic. If you lose your operator, then what are you left with as an investor?
Yeah. So you have to have people in place. It can't just be you. Do they come to you? Do you go to them? Like, is there a singles bar where y'all are meeting up at?
So, at some point, sometimes I wish. Well, I was at the wastewater, I was at the wastewater equipment technology and transport show. So that would be, the closest thing we get to a singles bar in our industry or some of these trade shows. But, typically we have like within our network is typically your trusted advisor is who we get a lot of our referrals from. So that would be your accountant, your attorney, your financial advisor, wealth planner, and then obviously like former clients that we've done work for, and just, introductions and people that we know, and kind of have that trusted relationship with, they could refer us in, and certain times too, we have get into some competitive dynamics, but for the most part in our industry, it's like, Will, you've been through it's a lot of work, right? And so you got to like really, gel and mesh with the firm, the advisor firm that you're going to be, I may be calling you at 10:30 at night on a weekday or through the weekend. Like I was, this whole weekend I was working on an LOI negotiation as an example, right? So it's one of those things where, time kills deals. And
Yeah.
so when it's ready to go, we got to go.
Yeah.
And so you really got to like the person and gel with the person that you're going to be, it's a 6 to 9 month relationship that we're going to be talking all the time. And so having good rapport and having an investment banking firm that you can know and trust, and that type of thing is really important.
But like, what's some of the coolest like up and coming technologies that people are starting to leverage to help scale and things like that?
Yeah, no, absolutely. And this, this is kind of one of the ways that we've seen this play out is, everybody kind of knows this, right? Your big corporations are slow to move. They move like an iceberg, right? So, what we found from kind of, being in the mix of the transaction side of it is that, we had a client that kind of essentially rebuilt his business over the last couple of years due to some unforeseen issues. But when he did it, he said, hey, you know what? I want to do it with less people, and I want to do it with all these new technologies that have, come available. And so as we're kind of showing the business to other different types of these platforms, we're like, whoa, that's really cool. We don't use that. How do you like this? Right. And kind of using these being an early adopter and trying to do kind of less is more, rather than having that accounting bookkeeper that's been doing the books for 35 plus years. Well, she's great at like inputting payables and receivables. Can she schedule jobs? Can she dispatch? Well, now with AI and some of these tools, I've seen, these AI calling agents that can do multi-channel, whether it's inbound, outbound calling to call and try to deliver leads, right? Or the performance product to show my guys what they're actually making on an hourly basis, or a product called TrueCast, that we've.
Yeah, TrueCast is cool, man.
Yeah.
That is a cool product.
Kind of, to basically kind of dovetails onto the call by call management and multiple devices across your whole entire enterprise, and, actually having a video or a FaceTime with a client without having to do any ads. So there's like a myriad of different, whether it be like dashboards or, all that stuff that's kind of broadcasted through the company so that employees are now seeing what's going on and kind of creating transparency. And I think, that type of an investment and starting to kind of utilize those tools, not only does it help you kind of cut down on some of that back office work that everybody likes as a contractor, but, allows you to then start scaling and growing your business. So, yeah, so this is kind of an interesting time, especially with, I think we see in the news all this AI stuff and what does this mean for me and all this sort of stuff. But it really is a way to take people from doing what I call tasks to now like empowering them to actually help drive decision-making and improve the business and do their job better. Yeah. Think of it as a tool.
So, Christian, what do you think 2026 is going to look like in terms of home services? Or are we going to see major consolidations? Are we going to see trends continue? What are you seeing from that point or that position?
That's a perfect question. And one of the things that, kind of what, and it's been hard to connect with Will over the last, several months. I've been spending a lot of time on the road, actually. I was, I think a lot of the listeners know who Tommy Mello is. So I went out to his event in Vegas, followed by the Service Titan Pantheon. I went to a Microsoft Dynamics convention. I was just at the foundation repair with, FRS, Foundation Rescue Supply, kind of learning about what they're looking, the industry trends. So kind of soaking it all in. And what I would say is, what's happened kind of in the consolidation space is that at first, kind of go back to 2020, 2021, there was this like, hey, if it's kind of like, if it's got a pulse, we're going to buy it. And so, if there's EBITDA on there, we're going to buy it and we're going to pay whatever for it. We don't care. Because when at that time in the economy, right, like debt was essentially free from a borrowing perspective. So when it doesn't cost you anything, hey, we're just going to buy it.
Yeah.
And we borrow at, near kind of zero or really low interest rates. And then, we can kind of stack. But now as interest rates have crept up and kind of the economy feels a little bit more normal from interest, growth kind of, well, this is what they say, but, perspective in terms of, hey, this is kind of quasi normal. What's happened and what's transpired is a lot of these, platforms have gotten big, and the consolidators have, again, it's kind of slowed down their M&A pace with a focus on kind of operating and making the investments in technology, and basically kind of, I don't know, say the better word for it is like digesting, all the acquisition activity. And so the market's still there, but the criteria and the analysis, and in order to kind of get a deal done for, the value that, a seller wants to get versus a buyer wants to pay, that gap is widened. And so what you're seeing is kind of a doubling down on, if you're a seller, the best thing I can recommend is like, hey, you gotta, not worry about kind of this external stuff in terms of what's going on, or, my buddy got this, or this business sold, or that business sold, or whatever. It's like, hey, what am I doing internally to grow this business? And, again, we'll talk about technology, putting in that CRM, that ERP system, right? The KPIs, the different, now we call it, instead of just using, I think the first question is like, hey, are you using service type? Just I'm kind of going back to the HVAC and plumbing market, right? Well, now everybody's using service type, it seems like. So now it's like, what else are you using? What's your tech stack look like? And that's kind of the, that's the term that's being thrown around, at a lot of these shows, is like, all right, so I'm using Service Titan, and am I using, a schedule engine? Am I using this add-in for AI answering? Am I using, Rilla, Chirp? Like, there's all these tools out there, third-party add-ins that have been written and developed out of the Service Titan platform to enable efficiency. What is that? Am I using that? Because when a buyer gets in the deal and they're looking at this, they're like, all right, well,
It revealed to me how many contractors, they see what it is on these group forums on Facebook and things like that, but they have no clue what private equity is. And this wasn't in our questions today, but I think we should really narrow that up. Just set a clear crayon definition, because people are hearing it a lot, but not a large amount. But I'd say, hell, 60% of contractors, they just think it's a cash out, and they don't even understand how it works. So let's just break that down first.
Yeah. No, and so I'll kind of start, private equity in terms of a definition or a term is basically, again, you've got investors, business operators, people that have, been in kind of, whether it be on the, most of the private equity guys, to be honest with you, like a lot of them start their careers on the sell side, helping advise and sell businesses, right? It's kind of the first tour of duty, because you get a lot of reps, and it, it helps you kind of like, define all the terms. And basically, on the sell side, what you're doing is you're positioning the business to the way that the investors or the buyers are looking to buy the business, right? And so then you have, a potential investor or a buyer of the business, could be a strategic, kind of like you talked about the vendor, maybe the family office, kind of, Will, that you mentioned. And then you have what I'd call private equity, and private equity is nothing but more than a term of, investors are raising private capital, whether that be through, family offices, pension funds, endowments, state teachers retire. My wife's a teacher here in Ohio, state teacher retirement plan. I mean, they've got a portfolio of assets, and just kind of at a broad stroke, they basically kind of divvy that up just like how you would on a, personal financial level, like, hey, equities, bonds, real estate. And then they have this little sliver, which is like, alternative assets, right? Or alternative investments. And that's quote unquote kind of private equity or venture capital. So they'll allocate those to fund managers or managers of that are investing in privately held companies. Venture capital is, they're investing in the market, is kind of how I define it. And a good term from a grand definition is like, hey, they're investing in big markets, right? Like they're already like past investing in AI. Like now private equity is investing in AI because it's real and it's actually generating cash flow.
Yeah.
But a couple of years ago, they're investing in AI and these big thematic approaches, right? And then you've got private equity, which in a traditional sense is investing in cash flow based businesses. And so the investors could be the family office directly now. They could be the fund managers. I mean, there's all different flavors of private equity. And, that's kind of one of the things and where we sit is we sit in that kind of, we're that conduit. Like we have all different flavors kind of in our Rolodex, if that's still a thing. I should say CRM. Of all these different types of buyers that are looking to invest in home services businesses or, just buy businesses and hold them and grow them, et cetera. So that's kind of private equity at the top level.
Yeah. Well, and that's good. And it's funny you mentioned about like AI and stuff, because I was talking to somebody the other day, and it was fitting because it popped up. And they're like, "Oh, we're in an AI bubble," and it's literally like, "No, we're not." Hell, even Jerome Powell mentioned this from the Fed. He was like, "The difference between like the .com bubble versus now is like half those companies they weren't real."
Yeah.
But these like AI companies, they have financial models, they are producing profits, they are generating revenue. And we like to think, oh, well, that's AI, that's an emerging technology. But home services is doing the same damn thing right now, which is cool because I know we're going to talk about why there's so much money coming to home services now and why I think it's the biggest opportunity in home services there ever has been or will be.
Oh, yeah.
But,
Oh, I agree.
with that comes a lot of poor managers into this space. So there's a lot of PE firms getting into home services. And what are several of the ones that you would say, as somebody that may be looking at selling, what's some of the red flags that this PE firm really isn't in their space or they don't understand how this works or maybe not have a success ratio? I mean, give us some advice there.
Yeah. So that's one thing that, when we have a client engagement, that's kind of our job, right? Is to, we're kind of going out on behalf of our client, the seller, the business owner, saying, all right, there's the number changes all the time, but roughly let's just call there's 70. If you're an HVAC, company or a plumbing company, I mean, there's 70 consolidated private equity platforms out there of all different sizes.
Yeah, there's a
locations,
lot of them.
there's a lot of them, right?
Yeah, and if you go back 4 or
yeah.
5 years, Christian, I mean, how many were there then?
40 to 50, 30,
Yeah.
there's,
So it's
so it's been growing like, at first it was like the Gettles and, some of the ones, the early ones that kind of started the kickoff of this consolidation. And really what enabled all that was, the technology, right? Like now you can manage multi-location. The carbon paper's gone away, right? Like, having to log in and VPN into, your QuickBooks and plug in an invoice and, everybody's on this technology, right? So, that allowed these businesses to scale and basically run it, so you could consolidate and run different operations from, Oklahoma, all the way up to Ohio. You could have them all on the same type of system, communication, et cetera, right? So that you can replicate the business model at each location. And now, where this is all coming to is like, hey, with this AI, I can, I even heard a stat, Will, to kind of go on your point, like AI is going to help the industry as a whole. Like, I think kind of just, and I'm talking like HVAC, right? Or but home services in general, run somewhere between 15 to 20% EBITDA margin. I mean, there should be a 5 to 10% pickup because of AI. And that's on the back office, the enablement, et cetera. And I even heard a stat in talking to somebody where, some version of an AI was able to take a call center from, 60 down to 9.
Yeah.
As an example. And that's not like, hey, we're coming in and firing, but like, I mean, you guys know, like turnover in the CSR position is, 30, 40, 50%. Well, I put this AI in and now as it gets trained and gets better, I just don't need to rehire.
Oh yeah, but also the opposite, where it's like if you're a small company, you don't have to hire all those people.
Exactly.
You got one person, you can scale to what an older company would take 6. So I think that's the opportunity for the small guys.
100% agreed. And you couldn't be more true. It's like, hey, there's that on the cost saving side and the efficiency side. But, like to your point, I mean, you go back, this is like one of the best times. And I even had this conversation. I've had it several times with whoever I'm talking to on the other line. This is probably the best time, at least that I've seen in my career. And I'm kind of mid 40s, like to start a business. It's never been easier because, all the tools are out there. I can CRM one touch, if I bill it, I mean, I could basically start a home services company out of my house, or I shouldn't say that because I don't know how to do the stuff, but with the right people,
there is that.
Yeah.
You do need to know
Hold
that part
on,
of it.
just
But
chat
I got all the
GPT,
AI
Christian.
stuff
You'll
covered,
figure
but I
it
don't have the
out.
trade stuff covered. So like,
Yeah, Christian, that's never
Yeah.
stopped Will from anything.
well, I know that.
Hey man, when I started learning code, I wish I had chat GPT. I just had YouTube, bro.
Yeah, exactly. So you're absolutely right.
Yeah. Well, but no, that's a good sign because I think there's a few different things that show that there's major consolidation in home services for the investment aspect, for mergers and acquisitions. But What are the big asterisks or telltale signs that you're seeing for 2026 being a major consolidation in home services through private equity?
After going to several of these conferences kind of in the fall and kind of in the preparatory of like, kind of hear the AI was coming and, anytime that there's kind of like a blip where we had like the tariff stuff, right? And that changes, kind of some of the macro dimension. Well, what took over that was AI, right? And people started to say, all right, well, if my cost of goods are getting more expensive, I need to look at ways to look at other ways to find and grow. And, with all the AI tools now that are coming to fruition and their work, you're seeing that as kind of the biggest kind of driver towards, what's going to ignite the consolidation rate. And I would say too, if we can get, we've been hearing bits and pieces of it, but if we can get a slight rate cut, a quarter, half a point, that's going to really kind of trigger a lot of the people that have been, deals are still getting done. It's just getting at a slower pace. It's going to create a more competitive environment. Let's put it that way.
Mm-hmm.
And so what that's going to do is it's going to drive up value.
So, Christian, if you were advising, like, say, a $3 to $10 million home service company, what would you be telling them to fix before private equity would be a consideration in any of the conversations that they're having?
I know, but it is one of those where, man, you know this, Christian. There's so many people are just like, they're so money hungry. But it's like that's not going to bring happiness to anybody. You know how that goes. But sorry, and I know we should talk about that on the other side of the sale, what that looks like. But go ahead. Sorry.
No, absolutely. But I think the one thing to mention is having that succession plan. And I think we run into I'd say well over 75% of the deals that we get involved with, there's an ownership dynamic where the business is still relying on the owner. And so the farther you can start to distance yourself away from that chair and being the guy, the more successful, number one, the business is going to be set up for success, post closing, but it also, kind of overcomes that hurdle of the reliance on quote unquote the owner, right? Because the owner may have in his mind, like, hey, my buddy, he sold his business and, and he's golfing every day. Why can't I do that? Well, it goes back to, we talked about it, right? The country club multiple. It's like, it's a multiple, right? I mean, there's all these different factors that go in, you got one guy that's over, playing golf all the time and enjoying that. And then the other one that's still working. And in order to kind of get to play golf, well, he's basically built a management team and a management system, that allows for scale so that he's removed himself instead of, and everybody's heard this, right? You don't want to be working, in the business, you want to be working on the business. And, what does that really mean? Well, I think the biggest thing that we see as the owners and our clients is like, hey, you need to be out like having these conversations. If it's a buddy, if you're a foundation repair guy, and well, this kind of goes back to, when I was at the show with you, it was like, there's a lot of like people in foundation repair that don't know who Tommy Mello is.
Mm-hmm.
And, and these types of people in other different industries, it's a home service industry, but they haven't, heard of them, but it's networking and it's checking out like, hey, what's the garage door guy in my town doing? If I'm foundation repair, he's doing home service, he's doing garage doors. Well, there's a couple little nuggets that he's probably doing that, that you could share, that he could share with you and you could share with him and kind of building that networking type of, arrangement across trades, not just, inside of a specific vertical, because I think everybody gets too very like myopic. It's like, all right, well, this guy's doing this because I need to do this, but Tommy's over here, using X, Y, and Z, and he's going from 0 to 250 million, and I'm going from 0 to 2 million, or from 1 to 2 million. There's a different approach, right? And it's kind of making sure that you're aware and educating yourself on all those different possibilities. And that's what we talk about kind of working like, on the business, is putting that type of stuff in place. And that's what really translates to value. And then also too, we've talked about this before, is the culture is super important, right? You want everybody on the same page. You're investing in a team, it's service business, it's people, right? I mean, we've seen it so many times where, hey, the check is stroked and, 20-30% of people like leave out the door, the next day when the new owners come in because they're just not the right fit. Well, that's you as the seller, like, hey, that's a culture issue, right? Like, you got to have your group prepped for, hey, this is where we want to go. If we want to be a lifestyle business and just kind of erp along at $5 million, which is fine, But if the goal is to go from 5 to 10 and bring on an investor to grow this thing and dominate a marketplace, you got to have the team that's willing to step up and be ready to do that. And that's a different type of individual than somebody that is just looking, say, for that, 40-hour-a-week job, kind of collecting a paycheck.